I'm Damien Fuller. I work as a senior accountant at PricewaterhouseCoopers in the Sustainability and Climate Change team. I did a Bachelor of Business at the University of Technology, Sydney, an honours degree with UTS and also the Chartered Accountants program. When I went to uni, I was really keen to study a second language, and it was explained to me that accounting was the language of business, and that really rang true for me, and that's why I wanted to become a Chartered Accountant. The Sustainability and Climate Change team is composed of a wide range of individuals with lots of different skills. We have engineers, chemists, scientists, accountants and lawyers, and that really makes a great environment to work in, working with different people in the way that they think and the way that they solve problems. I moved into the Sustainability and Climate Change team at PwC because I wanted to be working on something that had a real impact and real value to the world. Climate change is now a major global issue, and as a result, governments and consumers are requiring businesses to measure and report their greenhouse gases, and this has become the role of the carbon accountant. There's three main roles that a chartered accountant may be required to play as a carbon accountant. They may be required to measure and report greenhouse gas emissions. They may also be required to audit those greenhouse gas emissions. In addition, they may be required to take into account the value of carbon in investment decisions and forecasting and budgeting. Under the National Greenhouse and Energy Reporting Act, NGRA, there's four methodologies that can be used to measure greenhouse gas emissions. The main methodology that is used applies an emissions factor against an emissions source. For example, to measure the emissions produced by your car for 1 year, we would multiply the quantity of fuel consumed by your car by the unleaded petrol emissions factor. All the emissions measured in accordance with the National Greenhouse and Energy Reporting Act are then reported through OSCAR, the government's online reporting system. Audits are conducted over the greenhouse gas reports in order to check the completeness, accuracy and validity of the emissions measurements. Currently, these audits are not mandatory under the Act, but businesses can complete an audit voluntarily in order to check compliance with the Act. However, the government can conduct audits and senior management are liable for up to $250,000 for non-compliance. The accuracy of the emissions reported are important because they will form the foundation of the targets set under a future emissions trading scheme. An emissions trading scheme formalises the value of carbon, and that value needs to be taken into consideration with current and future business decisions. Once carbon has a value, it will be reflected in the financial statements. The amount of carbon emitted now directly impacts the company's valuation, incentivising them to reduce their emissions. Climate change is obviously a huge environmental, political and social issue, but through accounting we can make a difference. So if you want to be part of the solution, come work with us.